Welcome back, everyone, to another FEX Insights episode. This is number 10. I am your host, Mark Montfort from Not Centralized and the co-founder of Psych.ai, and we're bringing you a really interesting Insights episode today. We've got a guest coming in a little bit later, but first we're going to get to the news. Beginning with Australian local news, we start off with some further insights from the Digital Economy Council of Australia. I was lucky enough to head back with them from a trip in Canberra where we got to be part of the Parliamentary Friends of Blockchain Committee, and that was bringing the proactive policy paper that DECA had produced with a whole lot of different people in the mix, different working groups, and some really interesting insights that were recorded at the conference up on the Gold Coast. As you can see here, we've got some highlights that we put out from the Australian DeFi Association page as soon as this report came out. So the key features of the paper that you can see here on screen were that they spoke about a real-time transparency and auditability, tracking goods end-to-end with tamper-proof date-stamped records was one of the key topics as part of this report. Immutable ledgers were also in there, with secure and digital distributed ledger technologies mentioned and spoken about. So speed and robustness, real-time data flows, enabling immediate response to supply chain issues such as spoilage or disease outbreaks. And I remember as this was being presented in the report, we also had the different speakers. We had government ministers as part of that, but we also had speakers representing the industry. And I'll show you something on that in a further post. There was also more talk about data-driven trade and national interoperability frameworks. So all of this kind of stuff was in this proactive policy paper report. You can read the full report on DECA's website where they keep track of their submissions. So you can see the full 37-page report here and take a look inside because there is a QR code for further information from some of the reportees. So really great stuff. A lot of great contributors as part of this, as you can see here. You can see the partnership that group that was used to help develop this, the other key contributors. And as I said, the full-length version of the report you can see by scanning this QR code. Now over to the next piece. And further on the highlights there from the Parliamentary Friends of Blockchain delegation that went down. So I've got some highlights here from my own page where you can see some of the photos. So we've got Amy Rose there in terms of photos. We've got Paul Durham, the policy paper, who we got here. That is Sean White also presenting. We've got Andrew Charlton, Minister there. We've got Talis Putnams from the DFCRC, Andrew Bragg there as well, Shane Brunette from Crypto Tax Calculator, and then back to Amy Rose. But yeah, you can see all the different presenters. Rahul Advani was also there, and also Alec O'Sullivan, who's the policy lead over at DECA. But some of the highlights here include the collaboration part that was mentioned by Minister Andrew Charlton, economic opportunities, the $19 billion per year in benefits that was found in terms of research from DFCRC, OKX and DECA, and Talis Putnams spoke about that, as well as Project Acacia. Regulatory uncertainty as a key barrier. So Paul Durham had highlighted that, as well as Shane Brunette in his tax talk. And then speakers also spoke about the competition part being real, and how other nations, Singapore, the UK, Dubai, are all moving quickly to capture market share. So Australia needs to move quick. Tokenization and trade digitization and the immediate priorities. Sean White from XDC Network spoke about that as one of the final pieces. And then also Rahul Advani of Ripple, emphasizing the significant opportunity for Australia in the global shift towards tokenization of real-world assets. So a whole lot of support there down in Canberra. Let's hope it moves the needle. Further in local news, we saw some interesting highlights in the stablecoin front, with AUDC's AUDD stablecoin to be used as part of the Australian Payments Plus, or AP Plus, tokenized asset use cases as part of Project Acacia. So you can see here the media release on that. It was updated as of the 31st of July. So as one of the forms of digital money, we know that AP Plus was selected to have 3 of the 24 different use cases. So 21 of those are pilots with real money, and then The rest, the 5 of the others are, basically just POCs, so they're gonna be, not with real money, but, they are testing, no doubt, different rails and technologies there. So settlement coordination across tokenized assets is one of the, use cases that AUDD is gonna be part of, and then the NPP-enabled stablecoin interoperability proof of concept, where Australia's domestic real-time payment rails are extended with stablecoin on and off-ramp capabilities. So you can see more on that on the AUDD Digital website. Further in local news, we see this highlight from Capital Brief with Sydney crypto fund JellyC betting 75 million on Franklin Templeton-led pilot to woo big super. So we know that the exchanges, asset managers, and others are all targeting SMSFs because Australia is definitely a significant part of the global kind of pension fund money that is out there. It has, thanks to superannuation or what others call pensions, the fourth largest pool of pension fund or retirement money in the world. So we are forced to, in Australia, put aside a portion of our salaries to be part of that pension. That is increasing to 12.5% this year. So it's projected that we will grow to number 2. Given that, it makes a whole lot of sense that large players, Standard Chartered, Franklin Templeton, exchanges like OKX, and our friends over at JellyC, who you will see later on in this show, are gearing towards being part of that. So some really interesting insights here. We see Michael Prendiville, the co-founder of JellyC, being shown here in this Capital Brief article that you can read here. Another piece of news that came out locally this week was this one from Sean White, his post that Cloud Tech Group and XDC Network are entering into a memorandum of understanding, an MOU. It's a strategic partnership. So Cloud Tech is enabling like a safe pair of hands in the work that XDC is providing, the institutional grade enterprise custody transactions. So XDC has been at the center of this. They're instrumental in the ITFA fintech working groups, the trade finance distribution, and the digital negotiable instruments initiative. So great to see both of these groups coming together to further enable trade finance. And as you saw before earlier in the show, Sean's done a whole lot of research in the space, and XDC Network is certainly a key part of that. We're looking forward to more highlights as that partnership with Cloud Tech grows. Over to global news, and what we see here is JP Morgan to enable crypto purchases via credit cards in this Coinbase tie-up. So really interesting stuff there. What we see as part of that news is that they announced this major collaboration. So this is for the Chase credit card users to be able to purchase cryptocurrency via Coinbase. This includes redeeming card rewards for USDC stablecoin, and it starts in late 2025. So more of that integration of the crypto world into the real world. Another piece of news on the global front is this one where we're looking at Bernstein, where JP Morgan and Coinbase are doing a deal moving towards more institutional investors. You can see here the CoinDesk article, and the key things to know, as they say, Coinbase and JP Morgan have entered a long-term strategic partnership positioning the crypto exchange as core blockchain infrastructure for major US banks rather than just a mere trading venue. That's according to Bernstein. The move signals a shift in institutional posture towards crypto, and the partnership will accelerate crypto adoption per the report. You can see some highlights and might be even some videos here from CoinDesk. So the move is especially notable given that JP Morgan's CEO, Jamie Dimon, has been a critic in the past and probably still is in terms of crypto, but no doubt just given the size of the market, the other institutions that are getting in, they do not want to miss out. So really interesting stuff. Read more in this article here. Another article to highlight is this one from the Financial News, where CIS Capital is raising over 200 million in Bitcoin for a crypto fund. So we've seen the rise of various companies creating treasuries, following the likes of Strategy, which used to be MicroStrategy, which was a software firm doing a lot of things in the world of data, where I used to come from. And I've seen MicroStrategy be this company that was sitting next to the likes of Tableau and Click and all of these others for the data analytics stuff that they used to do. But Michael Saylor turned that into more of a crypto treasury company, specifically Bitcoin, we're seeing a whole lot more in terms of Bitcoin as well as Ethereum being used for treasuries as these asset classes grow. And SIS Capital is one of those other ones. So just another one of those dots that you can piece together and start to see a trend there. Back over to the US, and we see this article here from MarketWatch. The stablecoin law is here. It doesn't mean your dollar-backed crypto is 100% safe though. It may be stablecoin summer for crypto investors, celebrating the passage of a US law that brings regulatory clarity and is helping to speed institutional adoption of the popular digital tokens, but some major worries haven't been put to bed just yet. So even though we are tokenizing things, there is far more to it than just putting things on chain. There needs to be things like legal recourse. We spoke about this in previous episodes where it was all the things around like tokenized stocks. So you might be able to trade various kind of stocks on Robinhood, but tokenized versions of that, whether it was tokenized OpenAI, and the question around there, these private companies that are being listed or other private things that were just not normally listed on exchanges, traditional non-crypto exchanges, the question mark is around whether this is just an IOU or do you really lay claim to ownership there? And as you can see here, this article will get more into that, although you do have to sign up to read the full thing from MarketWatch. The next one is this article from Clever, and they give their crypto market update for July. I'll see if this is really clever or not. As you can see here, they highlight that in recent days, a wave of key developments have reshaped the global crypto market, record insto inflows, regulatory process in the US, new strategies from major banks, and the rise of Ethereum as a leading asset in ETF capital inflows. And really interesting before we dive in that Ethereum is seeing the rise as it has. It's been one of the mainstays of the crypto space. When you see safer investments, it's typically Ethereum and Bitcoin that are mentioned. Bitcoin as digital gold, and then Ethereum as more of that programmable money side of things. There's a lot of other kind of blockchains that are based on the same sort of smart contracts, EVM, Ethereum virtual machine, that Ethereum is based on. So it certainly has power. Then you also have these things called layer twos, which are other blockchains which aggregate transactions first to keep costs low before posting back using zero knowledge proofs, typically back to an Ethereum type blockchain, or it is actually Ethereum. So the rise in that has been maybe a bit of a slower burn, but if you looked at your portfolio right now and we're seeing just, wow, how high Ethereum has grown, it would be no surprise for those that have believed in the programmability and the capabilities of blockchain technology. So further in the report here, they talk about crypto ETFs hitting record insto inflows, 4.4 billion in just 1 week. It's been dubbed the crypto week, so really interesting. That was July 14 to 18. The biggest standout was Ethereum, so a lot more insto investors are diving into that because they see more use cases there. Ethereum leads in the insto inflows, 534 million in a single day on July 22nd for ETH ETFs, 13 consecutive sessions of positive inflows, and over 4.4 billion raised in July alone. Bitcoin saw outflows, but still remains a key player during the same week. Bitcoin ETFs experience occasional outflows. It could have been repositioning as people wanted to buy more of Ethereum type ETFs and others. What this trend reveals is a changing risk appetite, portfolio diversification, and ETH validated as an institutional reserve asset. There's further insights here on regulatory, the Genius Act, etc., JP Morgan potentially offering crypto-backed loans, and further on the 2025 outlook here from Clever. So it certainly looks clever to me. Next up is this Axios article on the White House pushing to embed crypto everywhere from taxes to retirement. So as you can see here, they speak about this golden age for cryptocurrency industry. Why it matters is because from taxes to mortgages and retirement, the Trump administration is wanting to embed crypto in the economy as quickly and broadly as possible. We see and feel a lot of that pressure here. So the push comes as the president's own family pushes deeper into the industry, profiting from an industry that's benefited from Trump's support. You would have remembered in the lead up to the election, there were the NFTs and various kind of crypto investments that you could buy into relating directly to the president's family. So conflict of interest I don't know. I mean, it seems very clearly so, but if you change the law, maybe it's not so conflict of interest anymore. But either way, it's certainly a positive for crypto overall, especially if other countries see that this is a green light to follow suit in terms of their regulations. The price of Bitcoin has soared 74% since election day. We've seen all-time highs. I think last night I was at an event and I saw it was at 118,000 US dollars. It reached all-time highs before of 122, 123 earlier in the previous weeks, but no doubt we're hovering amongst there, probably reaching further all-time highs, I've no doubt, in the lead up to the end of the year. Driving the news was a 160-page report released Wednesday from the President's Working Group on Cryptocurrency Markets, and you can read more on that with the links in this article and this article here. Back to Australia, and we see this article from Cointelegraph on tax. So is crypto still taxed in Australia? Major legal update explained. Nice image there of a boxing kangaroo representing, I don't know, the tax man and some other person being maybe a crypto investor. The key takeaways, TLDR, from this article is that Australia is one of the world's most crypto-aware nations, with over 31% of citizens owning digital assets and nearly 1,800 crypto ATMs across the country. Now, I haven't seen anyone in person actually use one of those. I have seen a lot of those around. So if you have, make sure to reach out. Or if you're one of the users, love to see it. We know a lot of people that are working in that space, and there has been in recent episodes where the government's highlighted some rules around how they want to put regulation around that. But as some people might think that this is a negative, the people that are actually working in the space see that as a massive positive. So I think that that is a great thing. This article also highlights that crypto is currently taxed as property in Australia, triggering capital gain tax on disposal and income, even on mining, staking, or payments. A May 2025 court ruling may challenge the status quo, suggesting that Bitcoin could be classified as Australian currency, potentially exempting it from CGT, which would be a major boon for crypto investors, users, and those working in the space. So keep an eye out on more of that and read this article here. The last one I want to leave you with here is an article from The Observer, highlighting that from shortcut to systemic, why stablecoins need real infrastructure. So we know that stablecoins and tokenization are some of the key topics that are being highlighted, as well as maybe treasuries and whether it's Bitcoin or Ethereum. But as they highlight here, by mid-2025, more than $260 billion in stablecoins, cryptocurrencies designed to maintain a stable value by being pegged to a traditional currency or basket of assets, if you didn't know already, moved through exchanges, lending desk, and retail rails. What began as a crypto workaround became a key tool for business to bypass slow banks, reduce counterparty risk, and move dollars across borders with fewer hurdles. I'm doing some work with my colleague Arturo where we're receiving payments, and in terms of whether that is overseas or even here locally, a lot of that is just slower on traditional rails. It's harder to trace, it's harder to verify. There's a lot more intermediaries. It is more in terms of costs. But with stablecoins, you can reduce a lot of that friction. So it's no wonder that they're being used. And one other highlight that you might have seen in previous episodes, as we highlighted, was that the use of stablecoins finally flipped in terms of who uses it more. It used to be that retail investors and retail users were the main users of stablecoins. But that flipped, I think, a few weeks ago, where institutions are now 60% to 40% of the retail usage. So there's more usage in the business and organization and finance world, and we'll see that rise as they see the value of this. Further in the article, they highlight when stablecoins replace bank, what fills the gaps. So in many regions, stablecoins have become the practical way to move dollars when banks fall short. Further in the article, they talk about the missing guarantees behind digital dollars. So whilst it is fast, it does come with trade-offs. So buyer beware, caveat emptor. So despite their growing role in global finance, most stablecoins still lack the institutional safeguards that support traditional money under stress. So whether those safeguards are the types of things that you receive from banks, insurance, etc., that kind of stuff is just not there yet, but is on its way. So you can see more of this kind of stuff and these topics in this Observer report. That's it for the news this week, folks. Now we'll get over to the interview. So stay tuned for more news as we see FEX Insights episode 11 out next week. Welcome back, folks, to another FEX Insights. This is episode 10. You would have seen just then the news, and now we've got a special guest and live in person. We've had a lot of the Google Meets recordings, but I've got the honor of seeing Michael Prendiville here in studio. Michael, thanks for joining us.
Hey, Mark, good to see you, mate.
You too. Michael's from JellyC, but for folks that might not know what JellyC is, or even your background, your storied history of going from the traditional world into this space, could you give the good folks that they might have seen you on other podcasts, and we'll talk about yours, but what is your background and how did you get into this space?
Yeah, g'day to all the viewers out there and the listeners. So my background, I've come from a banking space, started with ANZ in Perth, went ANZ Melbourne, went up to Asia, so to Singapore to run a dealing room up there. Over to London to run a global proprietary operation. Then came back to Hong Kong with Standard Chartered, down to Singapore, and then finished my career there. 2012 came back into, I started a hedge fund, which is based in the Caymans, and then I ran that all the way through to 2019. Around 2018, my eyes started wandering to, the volatility on Bitcoin and the yields that the space was generating. Of course, at that time, the interest rates were close to zero, and volatility on the fiat side, especially on the currency side, was close to no volatility at all. So it was only natural that I progressed over to the crypto side, and it's been brilliant ever since. So, we started JellyC in 2021.
Okay.
And then fast forward to October last year, we acquired Trovio Asset Management.
Yep.
And so they began their operations in 2018. So by legacy, we now have an entity which began in 2018. And by default, I feel like I'm one of the OGs, even though not really.
No, I would definitely consider you an OG. I mean, people consider us OGs in some sense, but we started in 2021, Arturo and I working in the space first, and then starting the DeFi Association, and then continuing on and working in the space. But it's really interesting with JellyC. Why did you name it that? There's a bit of a story to that background there.
Yeah, no, and it's a playful name, and it's a little bit like crypto. You've got Pancake Swap, you've got sushi and all that sort of stuff.
Yep.
So. To begin with, it was a playful name. We wanted a name that no one would forget. But underlying that name is for profit and purpose.
Okay.
So for profit is the C, and that represents capital. And we talk about all the stakeholders within the business and how we, try and have a well-rounded and balanced business that looks after the staff and the investors in the Manco. The investors in our funds, and all the third-party providers. So that is the, profit side, and the purpose is we try and support the ocean. So Jelly is a representation of the ocean.
Very good.
So a bit of yin and yang.
You're a bit of a ocean lover yourself. You do some of these like crazy long swims. I barely swim myself, but is it like some ocean swims that you do, right?
Yeah, so there's a swim in Perth from Perth to Rottnest. It's about a 20-kilometre swim.
Oh my God.
And
some people can't even run 20 kilometers, let alone swim. So
it's it's a terrific swim, and we support and we sponsor the Port to Pub. Which is one of the main events. So there's two, the Rottnest swim, Channel swim, and then there's the Port to Pub, and we sponsor that. And it's a huge part of Perth living. And, we get people flying in from all around the world, and, it's just a good, healthy lifestyle. And, we tie it in with, our affinity with the ocean.
It sounds like, all of those things that you're doing outside of crypto are certainly part of still the business ethos. So love to hear it. I think I'd be more part of the pub side than the port side. But
actually, my brother owns a pub.
There you go. So if any folks are heading over to Perth, and we've done some Oz DeFi events over there, some really amazing stuff. I think people are going to have to check out that pub. Should give a shout out. What's the name of the pub?
The Rottnest Hotel.
Yeah.
No,
so
good.
So check it out when you're down there, folks. I've got Chris nodding in the background there, folks.
Good place to have a beer on,
Absolutely.
on a nice day.
next time trip, I am gonna take the missus over there. We're gonna head to Rottnest pub. But I just wanted to also congratulate you because some recent news. There's been a whole heap of news in the Australian market about what's going on with Project Acacia. But you guys have also been in the market in the news just recently with this announcement about a deal with Franklin Templeton, Standard Chartered and OKX. Could you tell us a little bit more about that? And we'll throw up the Capital Brief article that you can see on the screen here. But what's this all about?
Yeah, so it's about bringing the traditional side in with, I guess, the digital asset side. So, Franklin Templeton have been around for 75 years.
Yeah.
Standard Chartered have been around for 175 years, or thereabouts, and OKX less so. I think there's, somewhere between 7 and 9 years.
Yep.
And then JellyC 2021. So it's a fusion of what is traditional and, what is the future. A really quick way of describing it, for the simple person would be, think of, for instance, you remember the Dolomites?
Yes.
The Sevier Dolomites.
Yeah.
Yeah, okay. So
I had one.
Exactly. Everyone had one growing up. You had a interest-bearing deposit. Okay, so imagine having that interest-bearing deposit, being able to use that money and still earn interest to be able to buy other things like, for instance, equities and bonds, etc. The collateral mirroring system that we're programmed, that we've entered into, is exactly the same thing.
Wow.
Okay, we enter into Franklin Templeton's money market fund, tokenized money market fund. We earn, so it gets converted into iBenji, which is their stable coin, and we get airdropped interest. It's on an hourly basis to begin with, but that might come in on a minute-by-minute basis at a point in the future. Then it is custodied within Standard Chartered. Okay, and then it is collaterally mirrored over to OKX. So
wow.
We get our cake in that we get to earn interest, and then we have it mirrored onto OKX. We can, for instance, go out and buy Bitcoin if we want to be long Bitcoin with a interest-bearing yield. It's we've got a bit of the best of both scenarios. So we have a Bitcoin Plus, which we just described. We have a market neutral, which has for instance, the tokenized money market rewards, and then the crypto rewards on top. Okay, so we feel like we have a very secure structure with Franklin Templeton, and a fantastic brand name, and they're really good to work with. And then we have great partners in Standard Chartered, and also OKX are brilliant too. They're looking to really immerse themselves in the institutional space. Because that is their next move. And Australia, which hasn't deployed wealth managers and big super, will be moving into this space. We're just setting up ahead of time. So
I think that's massively important, and we've seen and we've spoken about in the news, and whether it's for this podcast or others that we've been part of, seeing more of this move towards the institutions are coming in, whether it is stable coins, and it used to be that retail traders were the ones that held the most stable coins, but recently we had the flippening, as they call it in this space, where now it's 60% of stable coins and growing is institutional versus retail, and that won't turn back because much more on the business side. But even delving into the superannuation thing here, what people don't realize is that Australia is currently the 4th largest pool of pension or super fund or retirement savings in the world, projected to grow to number 2 because we increased the percentage that's mandatory for businesses to put aside for you. So now like 12.5%. With that growth comes opportunity. So could you talk to us more about what it is that you're looking to do there as part of whether it's the SMSF or just superannuation space overall?
Yeah, so that's a really good question. At the moment, wealth managers and big super can't allocate to the sector. Okay, so there's a number of reasons for that. One is we don't have a regulated structure in Australia to allow them to be able to invest. Okay, so what they require is a framework for stable coins, a framework for custody, a framework for the exchanges, and for advisors to be able to advise on crypto. Okay, so at the moment, they can't advise.
Yep.
On the superannuation side, it is all that, but it is another requirement in that big super have a benchmark. And if they don't meet that benchmark 2 years in a row, they can't take in new investors.
Yeah.
Okay, so it is all about beating the benchmark.
Yeah.
The benchmark doesn't include anything on the crypto side. Doesn't even include, you know, Bitcoin as a benchmark.
Interesting.
Okay, so that has to be changed within Australia.
Yeah.
There are, you know, discussions going on. I'm sure, you know, there's a certain sect down in Canberra who are giving this a great attention to detail. And, you know, we're engaging, especially on the Catena side.
Yes.
We're engaging on that side with them. But, you know, we need Australia to step up and to follow, for instance, the US, you know, have just passed Genius Act. Hong Kong is just, you know, they're really on the forefront. You know, some really exciting things are happening. Australia, you know, it's a huge opportunity for us to get involved.
We highlighted that in one of the first news article things that I showed in this episode, because there was a delegation. I was lucky to be part of that, representing Oz DeFi, not centralized, and seeing this proactive policy report that was put out by the Digital Economy Council that talked about this very thing, and the different people that are representatives of the different sections, from trade tokenization to tax to more proactive kind of regulation there. They all spoke after some government ministers. I think Andrew Bragg, Andrew Charlton, and Daniel Molino were there, all supportive of this space. So there is not from lack of wanting from industry, but we do need them to step up and take actions for this to happen. Now, you mentioned Catena there, and a lot of the audience are really interested in Catena. Could you tell us more about that? Like, as far as I understood it, there was like JellyC, and I know that you guys are close to Catena. How does that relationship work, and what is going on with Catena? Because we've seen some interesting things with them being part of Project Acacia as well. So I want to talk to you about that. But first of all, what's that relationship there?
Yeah, that's a good question. So JellyC has directly invested into Catena and holds a shareholding there. Catena is an independent company. And the company was set up to apply for a stablecoin license or for a AFSL in a non-cash payments facility, which gave it the ability to be able to issue a stablecoin. Okay, and just recently, they got the draft, and then the draft became a full license. So
congratulations.
We're very excited about that.
Exactly, we are.
And that's a big step for Australia. Because it really is ASIC. And for instance, you know, Treasury and, you know, and APRA as well have been involved in the process, but ASIC has granted the license, and it is really a commitment by Australia to push forward in this sector. So
that's like the SEC here for like people that don't realize what ASIC is. That's like our version of the SEC, but it covers commodities and stuff as well. So you got SEC and then CFTC separate. We've just got ASIC here. So yeah, very important, really.
It's a big step. You know, we are in the so I should say, Catena is in the process at the moment of, you know, getting everything ready to go onto the exchanges. You know, they will do they'll do a cap raise, and then you know, they'll deploy it, you know, throughout all of, you know, I guess all of the different layer ones onto the exchanges. And so yeah, it's an exciting time for, you know, for Australia, exciting time for us.
I think, yeah, it definitely, for all those points there, and especially with, it was announced with all the different participants, the various banks and other institutions.
Project Acacia.
And Project Acacia. And we're lucky to be one of those like use cases that's not centralized and building on Red Belly Network, our friends over there. But can you talk to us more about the Catena Digital one? Because that was mentioned as one of the use cases, and I'm sure the audience want to know more about that.
Hey, so you mentioned Red Belly. So for instance, one of the use cases that Catena will have is, and where we find a lot of friction within, for instance, the JellyC funds at the moment. We see a lot of friction in being able to send money into our, for instance, Cayman's vehicles, and, you know, to get it there in a cost-efficient way. Okay, so having an Aussie dollar stablecoin, you know, allows us to get money into the system, to have a FX rate
Yeah.
a very tight spread, an interbank rate on the FX rate.
Wow.
So we're converting from AUDM, which is the Catena stablecoin, to, for instance, USDC, and then bang USDC straight into our fund. Okay, and from there we can deploy it in however we want. Or for instance, it may even eventuate where AUDM, there is a cross against iBenji and we can put it straight into the Franklin Templeton unit.
Wow.
Okay, so for us, it saves a heap of margin.
Of course, yeah.
It saves, somewhere between 3 to 5 days of getting it into the system.
Yeah.
And, functionally, it's very good. So we'll talk about Project Acacia.
Yep.
That will be, we will use the stablecoin in a test environment to do a transaction in that way. Okay, so it may be buying units in one of our tokenized funds, or one of our funds that we're looking to tokenize.
Wow. There's some really interesting stuff there as well, because like what you just highlighted there, saving time and also lowering the margins that typically would be given away in a traditional world without blockchain. To get a faster time, you've got to give away more margins.
Yes.
Or to have lower margins, you've got to say, okay, well, I'm happy. It's like the standard versus express delivery that you see. But we're getting the best of both.
You don't know.
Because of blockchain.
Every day I look over to Drew, who's the CEO of Catena, and I'm saying, when WEN, when stablecoin.
Yeah.
When AUDM.
Yeah.
It's like, seriously, we need it desperately, for us to tokenize our funds, and for all the viewers out there, what that means, a live NAV 24/7.
Yeah.
So investors being able to one click in, one click out of our active funds, which is great functionality. To be able to facilitate that, we need a active Aussie dollar stablecoin.
Yeah.
And so this is just a prerequisite of finance in Australia moving forward.
I think what's also interesting is that in terms of the whole kind of like FX risk that you mentioned there, in the past we've seen people speak about that. Like, yes, we need to have, and we were part of project the CBDC project of 2023 that the RBA ran, and it was mentioned that, look, this would, even if they don't do a CBDC, wholesale, retail, whatever it was, we still need an Aussie dollar stablecoin, because how are businesses going to transact here in Australia on USDC when you've got the FX risk that is part of that? And so it was spoken about then, but here you're highlighting this is a direct need. You've got businesses now that are much more mature, that are actually transacting in digital currencies here in Australia, and we need to have those Aussie dollar stablecoins. So the movements towards getting licensed, towards testing and doing some further push towards that. And this whole test is the RBA seeing how can it support, how can the regulators support a digital world. So it's really important what you guys are doing, and I'm glad that you're building on Red Belly, because there again is something that's come out of
Red Belly.
Australia, CSIRO, University of Sydney. Apart from the love for it, like there's a great story there. And even if it wasn't Australian, I think that, we're biased, but the fact that it's AML, KYC'd, and you know who the participants are, and that it avoids those bottlenecks from, and I'm speaking a lot about Red Belly here, but like typically you get bottlenecks the more people are on the network. This gets stronger as more people are on the network or more nodes are on the network. So very cool technology that we see being pervasive, or this type of technology needing to be pervasive if instos are coming in. But
we need Australia to get behind Red Belly.
Yes.
We need Australia and other jurisdictions, not just Australia, but we need everybody to get behind Red Belly.
Yeah.
Because it is a well-governed, it is a very quick, cost-efficient way of transacting. And I feel like if we have a success story like Red Belly in Australia, and for instance, Catena, it will do wonders for the space.
And JellyC.
And JellyC, of course. But, they're projects which, we would like to support, and we'll throw all our weight behind, and, hope to come back on at a point in the future and talk just about Red Belly.
Absolutely.
And what we're doing with them.
We would be keen to see more of that, and we'll bring you back on, because you're coming back to Sydney a lot more for future episodes. We'll talk probably some AI stuff in the next episode. And I'm going to link below here that you guys have a great podcast as well. We're recording here, this is the 1st of August, but the podcast that you guys just recorded, when does that come out?
So the podcast with Franklin Templeton comes out on Tuesday.
Okay.
But we're just trying to do what not centralized and FEX are trying to do. You know, trying to sort of copy a little bit of your wonder.
We're going to support each other, folks. We'll jump on your podcasts and stuff. There's the Oz DeFi one, obviously Red Belly Insights that we work out as well. And all of this is just spreading the good word about what Australia is doing in terms of innovation. And technically, we're building the future of finance, but it feels like a bigger, it's not just these projects. It feels like more of a movement, kind of like a revolution, evolution, whatever people want to term it. It feels like that.
It's the first step. It's the first step in a lot of steps. But it's really exciting that we've been given the go-ahead by, you know, the government, and, you know, everyone's backing us. But there's a hell of a lot of hard work to be done. But the future is so exciting, and, you know, we haven't been able to touch on it, but there is some really exciting projects where all of this leads. You know, a really liquid and active stablecoin, you know, and you know, institutional partners like Franklin Templeton and Standard Chartered backing us, you know, it leads into what is, you know, a better world for all Australians and all of the people around the world. You know, reducing costs, better products, you know, more yield, you know, safer environment, you know, mitigating counterparty risk. What's not to like?
Absolutely. I love it already, and I can't wait to see you back for another episode of FEX Insights. So, Michael, thank you so much.
Mark, legend.
Cheers.
See you, mate.
There you have it, folks. Another episode wrapped up. Really great insights there from the news. You can see all of the articles and flick through that. Some of those you might need to get a subscription, but that's okay. Some of them are free. We also saw some interesting insights from our guest. And if you want to learn more about JellyC and what Michael is doing and the crew over there, you can check out the show notes for the links. But stay tuned for more interesting news wrap-ups, guest insights, and just more of what's going on, especially in the Australian space in terms of blockchain technology. There's some really interesting folks out there, some really interesting investments, movements, and just further development in this space. So if you were just sitting on the sidelines wondering what's going on, definitely watch this, basically this episode. I was going to say watch this article. What you can watch though is this episode on the FEX Insights homepage. So if you go to fexinsights.netlify.app, you actually get to see and interact whilst you're watching this video. You can actually see what is going on, and you can ask questions. So you can click on these buttons here, as you can see on screen, or you can ask a question whilst you're listening and watching the video. So you can get the TLDR, you can ask specific questions there. So we have the transcripts loaded as well as the videos, some really cool stuff. There's even some further education stuff that we've highlighted in previous weeks. So worth checking out, and you can see the links to that below. That's it for this week, folks. Hope you like, share, and subscribe. And if you wanted to know more, feel free to reach out. Cheers.